Hello and welcome to the Daily Report from IG. Well, overnight we did see, I suppose, some mixed sentiment coming from global markets and parts of the capital markets. Ultimately, we've still got the S&P trading below the April pivot of 1422. For me, I think if we get a close below that at the end of this week in US markets, then I think probably we can see the move down to about 1395, which is the 38% retracement of the June rally we've seen in the S&P. I think if we break that level, then I think you're looking down around the 1475 level, which is the 200-day moving average. So clearly, I think this 1422 April pivot on a weekly basis is actually quite important. We're trading south of that at the moment. The markets did make a move up to about 1420, but we did come off as the day grew on. People really focused on the FOMC meeting at 5:15 this morning or late US trade. The results actually didn't show too much, to be honest. I think most of the market really centred on Mr. Lacker's comments that he dissented once again, and not just on the size of or the length of time that we're going to see the Fed's fund rate being kept low. But I think also the levels of quantitative easing that he's quite disconcerted about at the moment. But ultimately, the Fed really didn't give a huge amount away. We still believe that the Fed will come out in December and they will actually increase the level of asset purchases they do and include US Treasuries as well to the mix when Operation Twist comes on. So therefore, we can't get overly bullish on the dollar, although we are seeing signs right now that risk aversion is coming back into the market. If you look at European PMI's number yesterday that came out during the European session, they were very poor, especially in Germany, which have come back to the lowest levels in some time. We're seeing a big contraction in German manufacturing, and it's clear their economy at the moment is really going backwards with the level of external their demand they're seeing as well. French PMI is a little bit disconcerting as well, or a little bit concerning, and I suppose that drove the aggregate number to a weak number, certainly below the expectations. And then I suppose if you have a look at the German business sentiment, the IFO numbers, they were below the expectations of the market. So I think that's a really interesting dynamic that's playing out. We are seeing a weakness in the economy. You can then focus on US earnings. And this has been getting a lot of focus over the last couple of weeks. If you look at revenue numbers now that is coming out in the US, they are missing significantly against consensus. We've seen 42% of S&P companies who have come out. We've nearly seen 40% of S&P 500 companies report thus far. 42% have beaten revenue. Now, I suppose over the last 4 quarters, the average has been just over 50%. Since 1994, that number is closer to 62%. So from a top-line perspective, it's clear that the S&P companies are missing by quite some way at the moment. EPS is growing at 4% on aggregate, which is great. It's certainly above the expectations. But a lot of that is being driven by cost-cutting measures that we're seeing at the moment, staff layoffs, etc. So the market's really focusing on the top-line growth that we're seeing from these companies, and it's clear that they are missing the expectations. So even a dovish or bearish nature that we were going into this was quite poor. And now it's backed up by what we're seeing there is certainly the expectations were still too high. So I think that's quite interesting, and clearly with the economics in Europe are not particularly pushing up. And there seems to be a clear trade that we're seeing at the moment, and that's being short US at the moment against what seems to be an improving Asia-Pacific region. Now that should be positive for Australia. Names like Fortescue Metals, Jindalby Metals, some of the iron ore names should be a buy on dips category at the moment. If you want to leverage play into this Chinese stabilisation, I think these are good trades to get into at the moment. Fortescue around that 409 level, which is the 38% tracement of the recent pullback, should be a longer term, a good buying opportunity in my mind. But I think what we'll say, you need to have a look at the fixed income market. Now, if you look at the auctions we've been seeing in US Treasuries, we saw a very, very strong auction of the 2-year yesterday, massive auction coming through. Last night we saw a 5-year bond auction that the bid to cover was down slightly at 2.7 times, but the level of interest we saw from pension funds and insurance funds was the highest level since November 2010. If you look at the German Bund auction last night, the 10-year Bund auction, we saw significant interest in that as well. Now that's telling me that despite a big strong risk rally we've seen, we haven't seen that reallocation trade out of the bond market and into the equity market. That's not happening at the moment. In fact, what we're actually seeing is probably a little bit of money flowing out of the equity market and going into the bond market as well. And I think that's down to the fiscal cliff issues we're seeing at the end of the year in the US. So there's a very good chance that we could see a bit more of a deeper pullback in the S&P. That's exactly what we're seeing from the fixed income market and from US markets as well. So, I personally am bullish on Asia at the moment. I think we're seeing signs of stabilisation, but I think what we're seeing in the rest of the world is slightly concerning for me, and that's why I'd be relatively neutral in my stance at the moment. But I think in Australia today, we are going to see a pretty weak open. We're going to see the market test this 4,500 level. Wesfarmers sales numbers will be in focus, as will ANZ's result, their full year numbers. From the skirting of what I've seen so far, the underlying profit numbers look pretty much in line. Net interest margins look a little bit weaker than the market's anticipating. Cash earnings touch weaker as well. Dividend bang in line. So perhaps there's nothing to get majorly excited about from this ANZ result on the face of the numbers I saw today. Elsewhere, Arium should do very well. There's more speculation in the fin that we're going to see a renewed takeover from Noble and POSCO. And I think ResMed's quite an interesting one as well. We saw that trade to a record high in the US trade as well. That stock's up 60% year to date here in Australia. So I think this is one you can look at the moment, especially if there are results coming out tomorrow. It's trading on about 19 times forward earnings, so it's a bit expensive, but I think it justifies that premium fully when you're seeing the strength of earnings we saw in the fourth quarter and what we're likely to see in the first quarter tomorrow when that comes out. So yeah, a bit of a weaker open today, and I'm looking at some big changes in sentiment from the bull market we've been seeing, especially from the bond market and the fixed income market in the US.